Now, this coming Friday, four of the largest US banks report earnings, and that kicks off the earnings season for this latest quarterly report. JP Morgan, Citigroup, Wells Fargo, and Morgan Stanley all come out with numbers on Friday. Markets have been somewhat turbulent, to say the least, in the last 3 months, while banks may have been able to charge more for customers to borrow because of interest rate hikes. Demand for those very products are beginning to bottom out and indeed dry up to some degree. And we're talking here about personal debts, corporate debts. We're talking here about some of the mortgages as well, which are now more than 6%. And that jump in borrowing costs has hit a lot of the demand within the sector, triggered by that higher inflation, the war in Ukraine, and other supply chain issues. Now, as a result, analysts expect banks, when they start reporting at the back end of this week, to increase by 5.4% year on year, so far as JP Morgan Chase is concerned. That's where we are looking for an increase in revenue to just over $32 billion. But analysts see a 22% drop in earnings per share to $2.91. 3 weeks ago, JP Morgan's chief financial officer warned the markets that investment banking revenue would be down by 45 to 50% in the third quarter. Last year, strong demand for IPOs and other deals pushing investment banking revenue up to $3.3 billion. But the amount of money being set aside to cover bad loans is likely to be one of the really big elements to watch out for so far as these banks are concerned. I want to take a look at the JP Morgan share price chart. Trades all sessions on the IG platform. You won't be able to trade it on Monday because the US markets are out, but it'll be back in trade on Tuesday. And you can trade this when it reports earnings before the bell on Friday. We're very close to seeing new lows for the year. Currently trading, or as at the last trade, we saw a 105.91 print for JP Morgan. As for the other three on Friday, the biggest US mortgage lender, Wells Fargo, expected to post earnings of $1.10 per share. That's a 17% decline according to Refinitiv. Revenue expected to fall by around about 1% to $18.75 billion. Citigroup, you can see their earnings per share $1.49 on revenues of $18.38 billion. And as for Morgan Stanley, the one major US bank that does not trade all sessions on the IG platform, analysts anticipate earnings of $1.52 per share and revenues to reach $13.23 billion. All these companies reporting on Friday before the bell.